So you want to buy a house. Most likely, you need a down payment. We'll talk about the exceptions separately, but most likely you need a down payment. Did you realize that all you need could be as little as 3% of the sales price of the home? You didn't. Well, listen on. This message is for you. So I was talking to a client the other day, and they were telling me that they wanted to put off buying a home until they had gathered up, saved up, scrounged up about 20% down. And to be honest, that could not be further from the truth. Because realistically, if you have income, if you have decent credit, along with the income, a steady job, a steady work history, guess what? You could actually buy a house, potentially even without a down payment, through a down payment assistance program. But if you so insist to buy a home with a down payment, the least amount you need to bring to the table is actually only 3% on the conventional loans, on the majority of conventional loans. We'll dive into the details of FHA a little later in the conversation, but let me explain to you why it is more important to actually buy your own home, even if you don't have the 20% down, versus waiting to save and in the process maybe never being able to buy a home ever. Guess what? The cost of living and the cost of homes is constantly going up. Yes, some people may say that prices will drop. Maybe. Do you have a crystal ball? Do you? I don't. I'm all out of prayer dust for that matter too. So we don't know that. All I know is that the homes that cost less than $100,000 back in the 90s are now costing at least $500 to $600, pretty much nationwide. So can you tell me that we'll ever go back to that less than $100,000 level? Hell no. So there we go. If back then you needed 20%, in your opinion, of $100,000, that's 20 grand. Simple math, right? 100,000 times 20%, there's your 20 grand. Well, today, average home is more probably around 400,000 or so, 500 maybe. Let's say 500 for round numbers. 20% of 500 is $100,000. Unless you're independently wealthy, how are you gonna come up with 100K? I know I can't. So is it better to come in with, let's say, 15,000 for a down payment? Buy the home today and let it appreciate. No matter how little appreciation rate is, the homes always go up in price over time. So you buying today ensures a nest egg for you and your family over time by building equity in your own home. So again, 3%, is this for you? Maybe. If you can, let's talk. Better yet, if you cannot come up with 5%, that opens up more doors in terms of qualifying. It opens up more doors in terms of little better program choices. But guess what? No mortgage is forever. No interest rate is forever. You can always refinance. Your home goes up in value, potentially. Therefore, again, you can always refinance into a different mortgage type. So do you really need the 20% down? No. Can you get in with a 3% down? I would love to hear your comments down below. But for now, let's move on to the FHA subject. FHA requires 3.5% down. Again, FHA does not stand for first-time home buyer. FHA is the Federal Home Loan Administration. So guess what? 3.5% down at $500,000. Is it an attainable amount? Is that something that you can actually put together? That's up to you. Again, comment below. I would love to hear it. But we're not talking hundreds of thousands of dollars. We're talking actually sums that are potentially attainable that you can actually come up with to become a homeowner and have your own roof over your head that nobody can raise the payments on over time, as opposed to when you pay rent and the rents go up every year. But here is the other important question. What are the down payment requirements if you do have the money for the down payment or are able to come up with it? Typically, that money needs to be, by the industry term, by the mortgage industry term, needs to be seasoned. That means that that money needs to be in your accounts for at least a 2 months period. Once the money has sat in your accounts for 2 months, it's good to be used for down payment. You're good to proceed. Now, are there other ways of coming up with the funds without having the money sit in your accounts for 2 months? Yes, there is, but that's for another video. So to watch on and to get your questions answered, let me know. Think globally about your finances, talk to me about it, comment below, and see you in the next video.